So Amazon is one of the big players here in the Middle East that is heavily invested in AI infrastructure alongside Google Cloud and Microsoft Azure. But when you see news like this, Amazon fired 30,000 people, and you see everyone talking about, okay, AI might have gotten to a point where we don't need employees anymore and so on, you start to think to yourself. And there's a false narrative that's going on the news right now. So what I want to break down today, let's take Amazon as a case study and what this means exactly for Middle East businesses in the UAE and Saudi Arabia and what's happening in this region because they're invested heavily in this zone. And it's not because of AI is getting, yes, AI is good, it can replace some tasks, but this move or this play over here, it's not because of jobs being replaced. And we're going to get into the reality of this. So, if you think about Amazon, Amazon has multiple sectors or revenue streams. And they make most of their money from the infrastructure they provide. And what was happening year over year is that they had the slowdown in growth in the AWS sector. And of course, anyone, if you tell them about Amazon, they immediately think Amazon, okay, I'm going to go on this app and order some whatever marketplace. But that's too low of margins and they don't make much money on that. But their main money comes from the AWS, which is the infrastructure they provide. And what was happening is that Azure and Google were pushing so hard when AI came. I'm going to show you a graph in a bit. And Amazon said, okay, we need to catch up to this in some way. So they said, in order to do that, we need more of GPUs, which is the computational power. And they went to their best friends, which is NVIDIA, or they could have gone to anyone and said, we want more GPUs. And the problem is that these GPUs cost a lot of money in order to buy. So this is essentially how the revenue structure is, as I was explaining right now, where they have their cloud services, which is high margin, and that's their main profit point. And then they have their retail store, which is low margins, and this is where they break even and so on. And the problem was that it's slowing down year over year. So they thought to themselves, okay, amazing, it's slowing down. My competitors are going forward, and Wall Street is not happy anymore because we're not showing AI leadership in a way. So I think the solution would be that let's buy more GPUs, which is infrastructure, but these GPUs cost a lot of money. So the constraint over here is that we cannot destroy our margins that we've created right now, but we need to buy infrastructure right now. So we have two choices to make. We one decrease the opex that we have, the operational expenditure that we have, and two, we need to increase the capital expenditure that we have, which is to buy GPUs, and then the cut the salaries being the most to them easiest option, which is not good for the other side, which are the employees, but that's to cut salaries. Let's take the money from here, put it in here, which ended up to 30,000 layoffs, which is the cash freed up. And this is again not because of AI has gotten to a point where it's replacing employees, but more of they needed the cash to win the AI race. And something similar happened when I was in the space industry, which also cash was taken from certain places to be pushed into other places in order to win the space race at that time. So as I mentioned, capex up, opex down, and the margins are saved. So now let's go one level deeper and ask why Amazon really needed that cash. Because before AI comes into play or gets to where it is in terms of the demand by the market and so on, AWS was the clear leader in terms of this infrastructure play. And then we had Azure and then we had Google Cloud. But after AI happened, AWS started falling behind, and Azure partnered up with OpenAI, and then you had Google Cloud, which had the AI first infrastructure and so on. So they were kind of losing the race, and they said, NVIDIA, if they give us some GPUs, which cost $10,000 to $40,000 each, we may be able to win this race again. And of course, when the media space, AI is in a bubble and so on, we're going to come into that. That's not particularly true. It was true maybe 6 to 12 months ago, but today it's not particularly true because the demand is extremely high, and the demand being high on a certain, let's say, technology or field means that it's not a bubble. So so you can see that corporate or organization demands are exceeding the supply, whether it's from Google Cloud or AWS or Azure. And then Amazon cannot provide to that demand that's coming in. They don't have enough supply. They wanted more GPUs. That means they needed to cut somewhere some kind of money, which is the 30,000 employees that they had. But what does this mean, and what's the connection between all of this with the Middle East and our region in particular? So all of these companies, all of these infrastructure companies, the Microsoft, and the Amazons and the Googles, they're all pouring billions and billions of dollars into data centers here in the UAE and Saudi Arabia. And very recent news is that Microsoft UAE investment, if you go and check online, you can see they announced this in November 2025. They put around $15.2 billion dollars, and then $5.3 billion by AWS in Saudi Arabia, and it's launching in 2026. And then you have this GCC data center market, what's expected to be by 2030. So they're investing mega money or mega investments within the UAE and this region over here. So this is extremely important for us to understand the dynamics of how everything is moving, whether we are trying to position ourselves or even partner up with any of these to understand the state they are in and what's their current situation within the landscape. And the prediction I'm making over here is that Amazon will not be the only one to lay off this many people. And what the media will tell you when Microsoft, Google, Meta, or all these tech giants that are in the AI race is that the media will say, okay, AI has gotten to a point now where it's going to replace jobs. Employees are in trouble. And then you have that cliche quote: "It's not the person that's using AI that's going to be obsolete, but the is the person that's using AI," something like that. So that's not particularly true for these giants. And that's how I want you to think, or the pattern I want you to watch through when this situation keeps on popping up in 2026 and the rest of 2025. And the pattern to watch is that when a tech company goes into 2025 or 2026 saying that, okay, we're laying off a bunch of people, look at the news. Did they announce any major infrastructure investment? Or are they expanding into new regions like our region over here in the Middle East or other regions as well? Or are they in talks with Nvidia, let's say, because they want GPU supply? And if any of these are there, note that the layoffs is very clear. Why is it happening? And the contradiction, this is where the media gets it, like it's telling us two ways and two stories which are very contradicting of each other. The first story is that AI is a bubble right now, it's overhyped and so on. Amazing, great, we believe you, but please explain to us the demand that there is within the marketplace if you're saying AI is replacing job and AI is in a bubble. Because if AI is replacing jobs over here, so I'm going to come into this logical contradiction, is that if they're replacing job, that means that there is real value that comes out of AI. There's corporate demand that exists because they want to replace jobs, and it's not a bubble. But if AI is a bubble, that means there's no real value over here. There's no corporate demand and not replacing jobs. So that's a big contradiction over here that can't take any place together, let's say. And there is, I can tell you for a fact, based on conversations I'm having in this region also, that there's a high demand for infrastructure, a high demand for AI systems and implementation and so on. And we're at the very early ages that most companies right now are not that automated. And this is good news and bad news at the same time, because yes, there is a window, but know that the window is not long or big enough for, or is not going to last long enough. So let's look at how companies usually, I find, respond to such AI demand within this region, and based on what Amazon is doing as well. So it usually starts with pressure, either a mandate from higher above or a KPI that's gone into the red that needs to come back to the green, or something that's happening with competitors, or they're panicking. So the Amazon path in this case was, competitors are winning, let's just get money, let's do certain things, the layoffs, and let's buy the infrastructure and just get things done. The second path could be that, okay, we need AI right now. I'm not sure what the problem statement is. And by the way, this is most companies. And they buy this random tool that exists somewhere that they think is going to solve their problem. And then they hope it will work. There's no real metric to be tracked or so on. And they find out that, okay, we adopted AI, but it did not work. And then you have the smart company path where you look at different areas or workflows within your business. And let me give you a fact over here: the majority of people we work with, they say that we've never seen our business this transparently or this clear before for the past couple of years after you've shown us our workflow. So point number one would be show the processes that are in place in your business right now, then calculate what areas that could produce you the highest ROIs, and think in systems and not tools, and have certain metrics to track, and then scale what works and do not or kill what does not work. So essentially, this is what I said, how Amazon does it, how most companies do it, which is random tool buying. And then you take the audit first approach where you look first before and diagnose before moving. And this is your gold mine over here. So if you want to start AI implementation based on everything that we've talked about over here, the question one is, where do we lose time? Question number two is, where do we lose money? Question number three is, where do we lose talent? Meaning we're paying this certain individual this amount of money, but they're doing tasks that is not worth that amount of money we're paying. So that leads to this intersection of overlap, and that is your gold mine, which is gives you the highest ROI in terms of implementing AI. And then you build the systems again, not the tools. You measure the results and the ROI in terms of certain metrics, and then you scale what works, as we just mentioned. And these are the typical questions we always start with. Where do we lose time? Where do you lose money? Where do you lose talent? And what is the intersection of all of this? So, what can we learn from Amazon's story over here and the Middle East, and how can we apply it to this region? So, point number one is AI infrastructure does not equal systems. If you see layoffs on the news, do not think it's because AI is replacing jobs, or even though that will come, but it's not the current time or reason of the companies in the layoffs. And you're going to see many, many more of that. And even tech giants, take it from me, they struggle with the implementation because they can't put together with all the resources they have the flow charts of exactly what you need. That's an opportunity if you want to tap into that, or if you want to do it for your own business. And capital allocation is more important than the tools itself. Either the capital is money or in time allocation, or the resources that you have, which is the manpower or the human resources. And the opportunity window is now for Middle East companies, where the opportunity is there that you can, the window's open, it's wide open if you want to capture on this opportunity, but please note that this won't be the case forever. So the key takeaway is that Amazon fired 30,000 people to free up billions of dollars so they can compete in the AI infrastructure war against Microsoft and Google. And it's not as we see it in the news, which is saying that AI automation is taking jobs. They think in OPEX, CAPEX, what do we do? What do we change? And this is what we're gonna do. And AI can replace tasks at the moment, but as a complete jobs, I don't think we're there yet. But we will be there very, very soon at the pace of where AI is going now. You can see with Opus 4.5 and GPT 5.1, and you see the cycle going on. And I'm sure Grok is going to come up soon with something at this rate. I mean, this thing are getting and moving really fast. And for Middle East companies, do not panic about AI taking your job. It's not there yet, but focus on implementing AI in the right way to handle the tasks. And always start with an audit and find out where you lose time, money, and talent. And that's exactly where the ROI is for your companies.